Welcome back. Well, with Nigerian index number 2 in Africa, talking about the stock market performance, I see Ghana was holding number 1 spot during a 3-month period consisting of June, July, and August. How does all of this, translate to economic development? Joining me now is Dr. Afolabi Lowokere, Chief Economist, Analyst, Data Services and Resources, joining me via Zoom. Great to have you on the show.
Good to have you. Good afternoon, Ladi, and good afternoon, Abdul.
Fantastic. So, number 2 in Africa, that's talking about the NGX. So, with this booming stock market, is this an indicator that all is well with the Nigerian economy?
That's a big one.
I know.
Definitely, stock market should also at least reflect what is happening in the economy. But before we start connecting the two, we need to also understand the size of our markets, the composition of our markets, and how the economy has been behaving vis-a-vis what is happening in the stock market. So, if you look at the financial sector in Nigeria, for instance, that is responsible for less than 5% of Nigerian GDP. So, whatever happens there is very important as something to avoid the economy, to duplicate the economy. But in terms of value added, it's not actually the biggest part of what happens in the economy, even though it's very, very important. If you look at the stock market, for instance, in terms of our capitalization ratio, yes, recently, especially when we look at valuation, we have been far better than we used to do. There was a time we were saying we are about 12% or 10% or 13% capitalization ratio. Recently, on the equity side, we are moving to about 20% capitalization ratio, but that is still relatively lower than what we will have in some other markets around the world, especially if you compare us with South Africa or Malaysia or some other countries that we also want to be like. Another way we can also look at us is in terms of the kind of firms that are on the market. This is an economy that has about 20% or 22 to 28% of the GDP being contributed to the agriculture sector, and not many of those are represented on our market. We have telecommunication, which is about 10% of our GDP. Yes, we have large ones like Airtel and MTN, and that's also very good for us. But we also have an economy that is on wholesale and retail heavy, and not all of these are also on our market. So when you look at all this, you can say that our market may not adequately reflect what is really happening in the economy. But now coming to the issue of now that we are doing well, is that an indication of that the economy is doing well? It may be a signal because we can see the stock market can be an early indicator in terms of whatever is happening to the market and tell us what's likely to happen for the rest of the year. So to that extent, we can say that maybe the economy can do far better in the third and the fourth quarter by the time we start seeing the results. But so far this year, growth has been relatively weak, and we cannot really put them beside what we have seen on the stock market. But the stock market relatively is doing fine.
Right, the stock market definitely looking better at this point compared to the economy. But looking at the market at 31% up year to date, are investors truly beating inflation, in Nigeria? That's at 24.08%. And why are investors not reacting to the interest rate hikes we've had, here in Nigeria?
Okay, so if you are in a high inflationary environment, you're also looking for investment that you can use to hedge, or at least to some extent that can price in the inflationary environment that you find yourself. And I think in recent time, looking at what is happening in the stock market, it kind of is able to compensate people from the high inflationary environment. As you know, the current interest rates will not be able to compensate people entirely, even though it's relatively high when we see what we have on NPL. But it's still relatively lower when you compare that to what is happening to inflation at over 24%. So there's always this tendency for investors to look for asset classes, especially in the face of liquidity, and especially in the face of weak macroeconomy, such that it may be very difficult to do some real investment, because government still has a lot to do in that area to be able to allow people to put money in real investment as against financial investment. That doesn't mean that financial investments are not very important, but real investment can make things to be more sustainable. So investors can start looking at, if my money can earn positive returns, having adjusted the inflation on the stock market, why do I have to put my money in other alternatives? So these are some of the things that probably will draw the kind of investment liquidity that we see in the market. And another thing we can also see in the market is that with the forex adjustment, a lot of things, positive things have happened, especially to exchange gain for the firms. And many investors are thinking, wait a minute, these guys are going to declare dividend or profit in the next quarter, so why don't you invest in some of these firms? When you also look at highly inflationary environment, and you are looking at the prices of some of these stocks, some of them can be relatively cheap, especially when you look at them in dollar terms. So all these factors, liquidity, foreign exchange adjustment, people having a positive outlook on the economy, and also thinking that the stock market, some of the assets that may be undervalued, may actually make people to put a lot of money in investment in the stock market.
Right, and the dominance of local investors in market, that has since pushed the all-share index to a 15-year high. Do you think foreign investors might want to look back into this market at this time?
Definitely. There's something. Also going to the end of the year, I know you study this always, and always reported it. Early in the year, most times you see a lot of investors who are rebalancing their portfolio coming into the country. So I also see it to bring down to the first quarter of next year, possibly. Another thing is that domestic investors can also start saying, before the foreign investors start picking, why can't I also take advantage of what is currently happening? So that by the time foreign investors are back to the market, because many of them probably are doing some wait and see. As you know, if you are foreign investors and you are holding a local asset, devaluation is a sanction, it's a punishment to you. You rather want to be outside the country when there is devaluation so that you can come back and pick some of these assets more cheaply. So definitely they were going to come back to the market. But what is also important is the general macroeconomic environment. And I think the government is trying to work on that. We can all wish them a very big luck. If you are able to have an exchange rate that is relatively stable, not that it has to be very low, but relatively stable, and can allow for a certain level of predictability. And how do you do that? You know, be able to generate forex, regardless of whether you are in services, whether you are able to sell oil, I think that's what we can do in the short term, as well as whether a manufacturing company can be very competitive enough to also bring in dollars. So if you have a good macroeconomic environment and government budget, efficiency and things like that are brought into place, in addition to what has already been done,
right,
possibly this investor will start having interest in Nigeria bank. At that level, there's some of this gain that we currently see. The domestic investor can actually fully realize them. Otherwise, it's just like holding assets that are very highly valued.
Right. Well, we need more. We need to generate more forex at this point and stabilize that market to whet their appetite. Thank you so much. Always good to have you, Dr. Afolabi Oluokere, Chief Economist, Analyst Data Services and Resources. Thank you.
Thank you, Bob.